Hey, I'm Juan. Thank you for joining me. Today, I want to discuss 5 things I wish I knew before I started trading. The first is know your psychology. All the stuff that's going to come with education and technical analysis and support and resistance, that's going to come easily. But knowing your psychology is going to be difficult. And let me give you an example of something that I had to fix over my years of trading. So I went many years where I would have a big day, meaning one, two, three, four, $5,000 in one day trading. And the next day I would come with a false sense of confidence. And the majority of the times that I would have a big green day, the next day I would follow it with a big red day because I was so confident. And if I was up $2,000, then when I trade, I would go in there thinking I have a $2,000 credit. I wouldn't kind of like reset and go in there carefully and stick to my rules. That was the first biggest thing that I used to do. So, how did I fix it? What I did was anytime I would have a big green day, I would not trade the next day. Or if I was going to trade the same day that I had a big green day or the next day, I would go half size. I would go much smaller than I would usually go. And if my first 2 trades were red with a small size, small portion, then I would just turn it off and wait till the next day and kind of reset. Everyone's going to be different. Everyone's going to have their own issues. Maybe someone else can have a green day and not even think about it the next day. But I knew my own psychology. I knew for myself, if I have a big green day, I'm not trading the next day. Or if I usually take 5,000, 3,000 shares in a position, I'm probably going to take 1,000 or 500. I'm going to go really, really small to test the waters to see if I'm sticking to my plan, sticking to my strategy, or is it false sense of confidence? So at least if I lose, I'm losing just a few hundred as opposed to a few thousand. So the second thing that I wish I would have done was invest in education. This is extremely important, and I kind of took it for granted. The first few years, I tried to do a lot of things on my own, and then eventually I invested in education. When I first started trading, there wasn't as much free education as there is now. Back then, you had to spend money. And I spent money and I learned a lot from traders and I learned a lot of strategies from multiple different traders until I formed my own trading style, until I formed a style that was comfortable with me. So, but nowadays, there's so much free information, you don't have to pay as much. The only problem is you really don't know what you need to know in order to start day trading. And this is just a shameless plug, but I'm having a free day trading course with multiple guests, multiple millionaire day trader. We're having Tom Nash, who's a big financial analyst, YouTuber. So, you can join that, and that's going to be a strong foundation. So making sure you invest in education, making sure you know how the market works, making sure you found your strategy, found some sort of strategy that works with you and that you're comfortable with, and a strategy that you can identify. Once you pick a strategy that you like, make sure you're able to identify it and jump in a trade. Know where you want to profit target is, know where your stop loss is. Having all this is extremely important. The third thing you should do before you day trade is paper trade. So once you've educated yourself, once you know your psychology, then put it into practice with paper money, not your real money, paper money, because you have to get used to buying stocks, selling stocks, actually seeing your strategy in real time as opposed to like a frozen picture where they show you these strategies and say, enter here. You want to be able to identify it in real time. You want to know how to buy a stock. What's a buy limit? What's a market? Knowing all this, you can do it with your paper trading. Once you do paper trading, the only fault with paper trading is the psychology of actually watching your account be down $500, $1,000 and sticking to your strategy is a lot more difficult when it's real money versus paper money. So when you're actually ready to trade, trade with extremely small amounts, maybe 100 shares in a position, 50 shares in a position, just to make sure it works. And if your position increases 10% and you do that consistently, then go 500 shares. If you see it's consistent, now you can start trading with 1,000 shares or a couple thousand shares. So if your strategy works with a couple of hundred shares and you're making your 5%, 10%, whatever your goal is, whatever your target is, then it's going to work as you scale up. The next thing is think long term. This was my biggest mistake. This is why I talk about growth stocks. This is why I talk about value stocks. This is why I talk about long-term investing And I don't just talk about day trading. When I used to day trade, and let's say at the end of the year, I was profitable and made an extra $50,000, $75,000 on top of full-time job, and it was just extra spending money. A lot of day traders would do, including myself, just spend whatever money I made, save some, and then start the new year again. This was a big mistake because I wasted multiple years doing this when I could have taken the majority of my profits, put it into some value stocks or into an ETF or into a growth stock that I was extremely bullish on, diversify it a little bit, and just keep doing that. So 10 years later, now you've had compound return growth. So think of long term. Don't Day trading is such a short term type of thing. Short trades, quick trades, in and out, quick profit. But think long term. Take a piece of your gains and put it into long term investments. The final thing and the most important thing is finding your own strategy. This is the recipe for longevity. Now, if you just try to follow people's alerts, if you try to join a Discord and just imitate someone else's trade, you're not going to have longevity. I've seen it over and over and over again in the decade that I've been trading. So many people come in, they follow some sort of small account challenge, and they say, okay, if this person can grow a small account to a large account, when they have their small account challenge, I'm going to follow every trade that they do. I was a victim of that. And it never works. I've never seen anyone become successful. There may be cases, but very few cases. Eventually, you have to become independent. You have to become autonomous. You have to be confident. You have to have a good strategy and stick to that strategy. So what does sticking to a strategy mean? Sometimes there are some traders, day traders, that they only trade about 10 stocks and they only have one or two patterns. And they are some of the best traders because they trade the same stocks, same patterns so often that it becomes second nature to them when they see it. And some people have scanners and they're able to find momentum stocks and they're able to just quickly scalp stocks as they're climbing up. And that's another strategy. And different traders have different strategies. Me personally, I have a few strategies where I like to see a combination of static and dynamic indicators that tell me this stock is in an uptrend or a downtrend. So the difference between static and dynamic indicators, a lot of these indicators are lagging. So if you combine some of those static indicators along with some dynamic indicators, meaning volume, meaning volatility, meaning candle movement, kind of like other confirmations, whether it's reading candles, looking at volume, looking at level 2, other indications that confirm some of those other indicators. And you have kind of like a confluence of a bunch of indicators telling you, yes, this is definitely an uptrend. Jump in here. If it doesn't continue to go up, get out here, small loss. If it does go up, then take your profit here, 2 for 1, 1 for 2, whatever it is that your strategy is. Find your strategy. And I only do that with a few stocks. Sometimes I add more stocks. Sometimes I just trade one stock for a few months because that's the stock that's on fire. Lately, I've just been trading Tesla, for example. Find your strategy, and that's how you're going to have longevity. Thank you for joining me. My name is Juan. See you in the next video.